All right. Good afternoon, everybody, or good evening, or good morning, depending on where you guys are. My name is William Mucker. I'm a client executive with CamaPlan. Today, we have a special webinar planned out for you. It's understanding mineral rights and how they can diversify and grow your portfolio with Troy Eckard, the CEO of Eckard Enterprises. I'll introduce him to you all very shortly. But before we get started, we have a brief disclosure that we always like to do here. Basically, this is just put on by a bunch of clever attorneys to let you guys know that we at CamaPlan, we're not attorneys, we're not tax professionals, we're not financial advisors. So whenever you need advice in one of those fields, please consult with your necessary licensed professional. Always do your due diligence. CamaPlan never sells or endorses any company or investment. Everything in this webinar is for strictly educational purposes. Always do your due diligence with investments, either with your personal funds or your retirement funds. And yes, we do not give any advice. Here's my contact information, William Mucker, client executive. You can either give us a call at one of these numbers or one of these email addresses. Send an email to me. If you have any questions about how anything that Troy speaks about today, how it applies to your IRA or retirement funds, I'll be more than happy to help you or walk you through the process. And without further ado, I'll introduce Troy. Troy spent the last 35 years in the oil and gas industry and started Eckard Enterprises, and he'll go more in depth with himself in his introduction. So without further ado, I'm going to hand the keys over to Troy, and he'll be able to introduce himself and teach you a little bit something about oil and mineral rights.
Well, good morning, everyone, or good afternoon, depending on what part of the country you're in. Will, thank you so much for inviting us to participate in this educational presentation. And what we'd like to do is obviously give the participants every opportunity to ask questions. So at the bottom of your screen are the Q&A button and the chat button. Anytime during the process, you're more than welcome to ask questions or chat. And Will, being the host, will guide those questions and answers and chats as we are going through the presentation, just as a reminder. I have a tendency to talk very fast. I have to moderate my speed just because that's my nature, my personality. But I think Will just handed me over the controls. So
yes, sir.
All right, so let me grab it and go with it. And apologize, but you know how it goes. It never works. I'll introduce myself while I'm grabbing the screen real quick. Basically, my background and my career started off in the oil and gas space, and from a very long experience in the industry, starting off on the financial side, I was able to learn very much about various aspects of the oil and gas industry. And with that, I was able to present that in a way to wealthy investors that allowed me to understand the intricacies of that industry. And of course, to be able to learn where some of the opportunities were as far as investments, returns, and risk. Today, I've been invited on the CamaPlan presentation platform to be able to talk to everyone specifically pertaining to oil and gas mineral rights. And now that I've navigated that while talking, which is multitasking that I'm not great at, I was able to get it. So I appreciate it. So I'll just give you a little background on my history. First off, having started my career in 1985, I offer 35 years of hands-on experience in direct oil and gas asset investment across the energy space. I started off my own investment firm back in the 90s, had a licensed FINRA firm for about 20 years, and specifically started putting together my own asset projects in about 1995. Today, our entire focus is on informing you and educating you about oil and gas mineral rights, how they can work in your retirement plan, and of course, what they can also do for you as an investor going forward as a possible consideration. So the main thing is to educate you and inform you. And of course, CamaPlan is an absolute professional at what they do as far as self-directed IRAs and platform and information. So we're honored to be on the platform, and we'll get started. All right, first thing I should tell you is that in my background, I've seen a lot of transactions over 35 years, as you can imagine, both in the oil and gas industry, real estate, pretty much across every alternative investment space, from timber to water rights. It just goes the gamut. They all seem to have the same kind of components. It is a hard asset. It is tangible. It is something you see, touch, kick, or feel. There's a lot of players that are trying to either invest in or sell investment opportunities in that space. But the one thing I can tell you is that if you are not following an expert or a leader in that industry, you're setting yourself up for a lot of potential harm, in the standpoint that really it's always about the individual leader or the individual executive or management team that's going to give you the advice about what to do, where to go, how to invest, and what that particular space offers. So let's get started as far as maybe kind of demonstrating some of the background that I possess that may help you understand that the information you're going to be provided has some real validity to it. First off, 35 years in one industry. I mean, I'm 56 years old. I'm a grandfather of 5 with a number 6 grandbaby on the way. Been married 35 years. I've always been an overachiever, but over the last 35 years, the oil and gas industry in the United States has gone through enormous changes. Probably no different than looking at your computer on your desk that you're using this webinar for. If you looked at a computer in 1985, I don't even know if we had a computer that was smaller than the office building that I'm in. It was a mainframe. It was huge. Now you have more computer horsepower in your iPhone than they had in the mainframes back in the 1980s. Well, the oil and gas industry has gone through the same cycles where technology, advanced information, software, hardware have really advanced the industry to now it's pretty much just a manufacturing process, very limited risk in the way of exploration, and a lot of exploitation opportunities as far as investors go with value and opportunities to invest in the industry. But over that 35 years, what I can tell you is that the funnel of opportunity has gotten better and better and better. There's no longer really a middle class in the oil and gas industry. Small companies are falling by the wayside. Even the big companies are struggling to maintain that concentration of value. So I would say the middle class, the oil and gas industry has disappeared. And what that has done, it's consolidated a huge industry into very few players. And because of that, it really has provided less opportunity, meaning that there's less people that are involved in drilling wells, buying leases, developing minerals, putting together pipelines. And so from a private investor standpoint, who may want to invest directly in the oil and gas space, there's less and less opportunities for you to do that. So it's a combination of big business, smaller opportunities, and very, very limited ways you can successfully navigate investing directly into oil and gas assets. All right, so let's talk about natural resources. First off, many investors, to my surprise, are not actually invested in any type of natural resources, both in the public equity markets or in actual direct ownership. For some reason, they simply have not tied the two pieces of the puzzle together, knowing that what happens in the economy and what happens on the stock market and what happens in public securities is almost directly affected by the cost of energy and the access to economically viable energy resources. So whether it's wind or solar or hydrocarbons, the fact is that this country and almost all civilized countries are all dependent upon some kind of a reliable, abundant resource of energy. And your stock performance, your company's performance, your cost of fuel, your utility bill are all predicated on whether or not oil and gas or energy resources are economic or not. So it's really important that you decide, is natural resources something you should or could put into your own portfolio, and how does that help balance what you own? And the second thing is you got to figure out where you're going to go. I mean, what part of your portfolio do you want to use direct money out of your normal investment account? Do you want to use some money out of a retirement account? Do you want to move money out of a traditional IRA into a self-directed IRA with somebody like CamaPlan? And the key is that it's all about tax management. It's all about liquidity. It's all about growing your assets tax-free. And of course, it's about accessing the capital that you believe can be put into an investment and meet the time horizon of that particular sector. You also have to have a willingness to learn. What I find one of the biggest detriments to any investor looking at natural resources like oil and gas minerals is that they have a desire, but the very limited amount of time they will afford giving to something like a webinar like we're doing today is quite amazing to me. I mean, I know that I have literally believed in my mind, I've gotten a PhD lesson in business because for the last 35 years, all I have done is work on behalf and alongside some of the wealthiest people in this country who have been diversified, from manufacturers, doctors, inventors, philanthropists, billionaires, down to people with only $1 million net worth. And so I've seen enormous amounts of businesses very close up in detail, visiting their sites. And what I can tell you is you have to have a willingness to take the time to learn about the sector to make sure that you're successful in deciding two things. One, do you want to be in it? And two, what's the most safest way to navigate that? And last but not least is that you have to have a desire to build your wealth and build your plan, because whether you're building a stock portfolio, a real estate portfolio, a bond portfolio, it's not a one-time investment. It's not something you just do it today because you're in the mood. You're going to invest in something like natural resources because it's something you believe is a strong cornerstone to your portfolio. So these are the 4 things I think you have to think about as ingredients for success. Now, what are mineral rights? And I'll try to keep this as non-technical as I can, but I will tell you along the way, let's just make this very easy. Oil and gas comes from underneath the surface. It's not mined like coal. It is basically trapped in porous rock or formations below the ground, could be 1, 2, as much as 3 miles below the surface. It was deposited there over years and years, millions of years, where dead plants and animals in the form of organic material was deposited back when the earth was changing its positioning and changing faults and changing tectonic movement. And over time, it was covered over. So the best way I can describe what mineral rights are, it's like a big pot of rice, okay? I want to cook a big pot of rice. So inside that big pot of rice is all the mineral rights. Everything from the lid down to the bottom of the pot. Inside is the mineral rights that I can own or I can acquire. And what's happened over the years is that the magma in the center core of the earth has heated up all those hydrocarbons made out of organic material. And because of that, they have been converted into a petroleum product, whether it be natural gas, oil, or condensate. So here we have this big pot called Earth. It's full of heat. It's full of organic material. It's been cooking over millions of years. And now all I need to know for me to be able to take advantage of that is, how can I buy a legal, real piece of property that's deeded in the courthouse that declares I might own minerals underneath that well in that photograph on your screen? How do I do that? Can I do that? Is it available for me to do that? Well, one thing you should know is the United States is one of the only countries in the world that allows private ownership of mineral rights. Most countries keep that as a sovereign right, meaning that the countries that the land is in owns all the mineral rights. You look at Saudi Arabia or Russia, the other OPEC countries, the government owns it. The United States, by the way we treat our property, you get to own not only the surface rights, you get to own all the oil and gas, or actually all the natural resource rights below your land, and you also get to own the air rights. But when you think about mineral rights, they are a transferable deed, backed up by a deed. They are real property, both under the IRS rules and under the rules of real estate. And they're in fact treated just like a parcel of land if you were to buy a house or a mobile home park or an apartment complex, okay? Traditional real estate flipped upside down is the best way to think about it. What does that mean? Well, if you went and looked at a raw piece of land, you might say that's a great place to put in a 10-story high-rise condo project because it's in downtown Dallas, or it's somewhere where I think that the market is going to provide a decent return or yield based on occupancy and based on income streams and based on net profits. I think it's okay to build a 10-story condominium project on that location. But in the case of oil and gas, it's just the reverse. Oil and gas geologists, geophysicists, oil companies, Exxon, Marathon, the major companies, they look at all the oil and gas fields in the continental United States, and they know that there are sequential layers, formations of oil and gas trapped in the ground, starting as shallow as 1,000 feet, maybe down as deep as 20,000 feet or 4 miles below the ground. And so we as an industry, the oil and gas industry, we approach developing mineral rights the same way surface developers go out and develop a 100-acre parcel of land. They know they've got to get it entitled, they got to get it permitted, they have to declare what they're going to build, where they're going to build it. They know they probably either have a land lease or they bought the land outright. But at the end of the day, it's all about entitling your land and moving it forward in the stream of value creation, taking raw land and moving it into permitted and approved and annexed land, and then going vertical by building a structure on it, and by leasing it up. Oil and gas minerals are the same way. We lease our mineral rights to oil companies. They pay us a big lease bonus up front, just like leasing a commercial building. And then, of course, what we do is we allow them to go out and spend all the money and take all the risks, meaning the oil companies. The only difference between real estate traditional and oil and gas real estate, like mineral rights, is that we receive a percentage of all revenue without ever being exposed to any cost and not being exposed to any liability or risk, and that's called a royalty payment. Now, the mineral industry, as of about 6 months ago, was valued at an industry that had probably about $500 billion of opportunity. It is a massive industry that's really evolved to this degree over the last 10 years. So it's a brand new industry based on the way it's managed today. So it's got plenty of opportunity for growth. You can be buying minerals from now for the next 20 or 30 years, and therefore you can be an active player, an active investor in developing successful mineral rights if you find the right area and you have a right plan put in place. Okay, so this is what the United States looks like today. Today we have found and discovered huge buried basins. Basins is simply a fancy word for saying a buried Grand Canyon. And these basins, which were geologically positioned millions of years ago, effectively trapped some of the highest concentration of dead plants and animals. It's like big burial grounds. And all those basins over time were filled in because of erosion and filled in because of tectonic movement. And those basins sat there for the last 100 million years and cooked all that organic material. And now the United States, who was literally out of oil and gas in 2008, we were running out of oil and gas, the lowest production figure since 1941, which is why oil ran up to $145 a barrel in 2008. In 2008, this country was in deep trouble running out of the very resource that runs this country's economy. But the geologists, the price of oil being high, and the technological advancements made in horizontal drilling, computer-driven technology, and frac stimulation allowed the oil companies to take the risk and unlock the successful key, which is how do we go drill in these organically rich basins and successfully find enough oil and gas to supply this country? Well, they did that. And what they did from 2008 until about March of this year, before the COVID drawback, is that they were able to take us from 3.8 million barrels a day to over 13 million barrels a day in output and production. That was unbelievable record pace of creating production inside the United States, all because of two things. Technology allowed us to safely, successfully, and with almost a 99% success rate in drilling, find a tremendous amount of oil and gas. And the second thing that happened to us is that we had a high incentive because in the United States, we're able to develop our property at our own pace as a private sector. So you had private sector competition. 30 states in the US have oil and gas in the shale basins. 30 states offered all the opportunity that was out there. And this country took that advantage and ran with it. And by 2020, we became the largest #1 crude oil producer in the world. We actually were producing more oil and gas than Russia and Saudi Arabia. So if you don't hit dry holes, you have all the technology and plenty of oil and gas, you can quickly find oil and gas at a very successful pace, which is why this year with the COVID slowdown, the price fell because we produced too much. We were too darn successful. It's okay. I'd rather be successful than drill dry holes. Now, let's talk about the content of this particular webinar. It is about mineral rights. It's about understanding how they work. So let me give you this picture on your screen. First off, when I drive from Dallas, Texas, where I live, and I drive toward Colorado, where I have another home, I pass by some of the ugliest scrub brush land you've seen in the Panhandle. I mean, you can't hardly grow one cow on 100 acres because there's nothing to eat. But what I do notice, because I'm in the business, is that that guy you think has horrible land, it's ugly, don't want to live there, he owns a lot of valuable natural resource. He owns windmill-driven property because it's very windy in the Panhandle. So he has sold the rights for wind companies, windmill companies, and wind energy companies come out and lease his land, put the windmills on his property, and now he gets paid a royalty payment for all the revenue generated from those windmills. There goes one right, which is air rights. The next right he has is the surface right. He's got cattle, he's got horses, he's got agriculture. He can put solar panels on top of his property. Anything connected to the surface belongs to the surface rights. And then in the same area, this is some of the most prolific areas of the United States in the Permian Basin, Delaware Basin in West Texas, where they have found the equivalent of as much oil and gas they believe as Saudi Arabia has. So this poor guy you felt sorry for 20 years ago now has not only scrub brush with cows and agriculture on top, he's making millions of dollars from windmill energy revenues and royalty payments. He's also making millions of dollars from oil and gas mineral rights below the ground. And he sits back and just smiles from ear to ear when everybody else thought he was going broke as a farmer or rancher. This is what we want you to consider. Is there a viable place in your portfolio that you might decide owning some of those mineral rights from individuals who may want to sell those rights in the right place, in the right kind of development, with the right kind of professional company to lead you and guide you? Is that something you should be putting in your portfolio? Let's keep going. All right, so I'm good about the visuals because sometimes I just think it's real important. A lot of times you have a difficulty with visualizing it, but on the left-hand side is a schematic. It shows you, let's call it the equivalent of 1,280 acres, which is 2 square miles. Basically, a horizontal well in the United States is drilled on either one square mile or 2 square miles, because it depends on how long the horizontal distance is. When they drill down 2 miles, they go out 2 miles, they need about 1,280 acres or 2 sections of land in order to successfully be able to drill that well and follow the guidelines and the rules. So when you take a look at the comparison in this analogy, and I'm again trying to get my computer to work here, sorry about that, ladies and gentlemen. All right, here we go. You have essentially what I gave you was like a small apartment complex. And what I want to just remind you visually is that when you own the mineral rights, you effectively end up getting the rights to any and all natural resources below the surface. So it's not just specifically oil or specifically gas or one formation or a certain depth. from a technical perspective, just like that surface owner, he owns the surface rights on his entire property, and most likely he owns all the air rights directly above his property. Well, if that farmer or rancher needs to sell one of his assets in order to generate some revenue to pay off the bank or buy a tractor or generate some revenue for buying more cattle, he looks at his assets and says, well, I don't want to sell my ranch. What I can do is maybe I can sell 40 or 50 acres of the mineral rights under my 1,280 acres. And the buyer would end up owning a percentage, 40 acres divided by 1,280 acres of my entire mineral right holdings. I'm okay with that because any and all oil and gas that's produced from that 1,280 acres is like owning an interest in that apartment complex that you see on the screen. If I'm a percentage owner of that particular commercial building, I get my revenue from all the resources of revenue generated from that particular building. I get it from the retail stores in the bottom. I get it from the condo owners when they pay their rent and their association dues. And it's the same thing with mineral rights. I get to participate in the entire inclusive mineral package from the standpoint of where it's permitted and how it's put into a particular asset holding. All right. So one of the things to focus on is that this is not a small type of a scenario. And I am tracking my time so that way I can make sure that Will and I are able to have some dialogue back and forth at the end. But multiple valuable reservoirs to exploit. What does that mean to you as an investor? It means the following. If mineral rights are bought or acquired in the right location, and if in fact those mineral rights are retained and you allow full development for those particular mineral rights, you could end up having one particular reservoir that has wells drilled in it. They're successful, 99% success rate. And 5, 10, 15 years later, the same company or a new company comes in and drills the second reservoir, the third reservoir, or the fourth reservoir. There are mineral rights owners in West Texas that when they had wells drilled back in like the 1910s, they were told your wells are economically viable for no more than 5, 6, 7 years. Some of those same mineral owners are getting checks now over 100 years later, but now it's not from the main original zone. They now have discovered 5, 10, 15 additional geological pay zones. So the key thing about minerals is that because you own all depths and all rights, you have this asset that can, if acquired in the right location, can keep giving you revenue for 25 to 50 years or longer. That is really important for those of us who would like to own assets, seek the cash flow, get cash flow monthly from those royalty payments every time they sell oil and gas each month. But more importantly, it's something that has a long-term value that can generate revenue and asset value to our heirs and our estate and our kids and grandkids. Mineral rights offer that kind of an opportunity with long-term cash flow and production. So the visual I would give you as I described those basins a while ago was that it's like a buried Grand Canyon. Each one of those layers in the Grand Canyon represent a depositional time frame, a certain time in with the deposits of what was taking place, volcanoes, organic material composition deposits, et cetera. They were all occurring. And as this Grand Canyon filled in, each one of those individual layers were cooked and compressed with a lot of pressure and a lot of organic material that was converted into oil and gas. And so when you think about owning mineral rights, it'd be like you owning 20 acres in the Grand Canyon from top to bottom, loaded with oil and gas, if you buy in some of the successful oil and gas basins, similar to what our company does, okay? Now, let me tell you what's changed so much and so dramatically over the last few years, okay? First and foremost is that the oil and gas industry is probably the number one user of software and hardware, which means that it is using the same kind of advanced technology as artificial driving, artificial intelligence, the same kind of GPS coordinating tools to send spacecraft into Mars and the moon, et cetera. And so let me give you an example of how some of those changes have occurred. On the top of your screen in the left-hand corner is a well that was drilled in 2012. The technology, when they went horizontally, was not very good. They weren't able to stay right in the zone of the formation that they wanted to stay in. You can see that by the black line as it goes up and down. And then you have within that black line, that horizontal displacement, you have where the well bores actually intersected or encountered some of the hydrocarbon or oil field parts of that formation. Well, when this company drilled the well, and it's a good well, it came in and produced, basically 2.3 billion cubic feet of gas. It's produced in 87 months, almost $4.7 million in revenue. If you and I were the mineral owners in that property, we would have generated just under $1 million worth of value to us as a mineral owner in that particular property. Not a bad investment, looking good, all depends on what you pay for it, but that just gives you an example of what it did in 2012. The same area, same company, newer, more advanced technology, only in 6 or 7 years, the same caliber well produced almost exactly the same amount of gas, 2.6 billion cubic feet of gas. You can see that down in your lower green image at the bottom of your screen. And that well generated that in as little as 5 months. So in 5 months versus 87 months, the well generated more revenue than what was done in 2012. That's how advanced the technology is, and that's how more economically advanced buying mineral rights is today than it was even 6 or 7 years ago. So the reality for you and I is that we are not only able to invest or look at minerals as an asset in one of our portfolios, we're also able to take advantage of the significant change in the technology and the improvements economically and also in accuracy of developing mineral rights all over the United States. All right, this is just a visual picture we took with one of our drones, but this is an actual location in Oklahoma where we primarily focus our time. But it gives you two things. On the far left-hand side of your screen is an aerial shot, like if I hung you out of a helicopter, and it shows you where the yellow small box is. That's called a pad site. Now, everything inside that yellow box that goes in a rectangle on the left side of your screen, that would be comprised of approximately 2,500 acres, 2,500 mineral acres. Everyone that owns minerals inside that yellow box will get their proportionate share of the revenue generated by the 13 wells that were drilled in those two particular producing units. Here's the deal. It's like a swimming pool. If I own mineral rights inside that yellow box, if I own 10% of the minerals or 128 acres or 250 acres, I'm going to get my mathematical share of all the revenue for every drop of oil and every molecule of gas that's pulled out of the ground. So it is not like I'm having to pick the winning number in a lottery game. I'm not having to pick the winning number at a roulette table. What I have to do is hire an expert who can tell me where they're drilling and why, where there's more wells drilled than other places, which is the better company to drill. But I want to be a mineral owner because when they turn those 13 wells on, I get paid every single month for my share of every drop of oil, every molecule of natural gas. I never pay one expense. I have no liability, no geological liability, no plugging liability, zero environmental liability. All I know is that when this company gets a check every 30 days from the buyer of their gas and the buyer of the oil produced from these 13 wells, the very first thing they'll do is they'll take from the very top of that gross check is they will figure out 20% belongs to the mineral owners in the form of a royalty check. We only get 80% of the revenue. And even though we paid 100% of the cost, we will pay the mineral owners first. We get the balance, and then they end up offsetting their cost of investment based on the 80% revenue. You and I, the mineral owners, we get 20% in this particular example without paying any cost, and we get paid first and foremost. No matter what's going on in the wells, no matter what's going on in the commodity prices, we get paid first. So let's talk about a little bit about what we've been doing, because I think this will help you understand there is a real significance in buying minerals. There's also a real significance in trying to educate yourself about the market and a real opportunity to find professionals that can lead you. There are publicly traded mineral companies on the New York Stock Exchange where you can literally buy their stock. They buy minerals, they provide some kind of a dividend, and you're hoping the stock price does equally as well as maybe the dividends that are being distributed. We as a company do not have public securities, so what we focus on is mineral rights for long-term personal ownership. So you, like attending on this CamaPlan IRA webinar, self-directed IRA webinar, you have to be thinking, is this the type of asset I might want to own directly instead of in a publicly traded stock? I would like the full financial benefit of the revenue and the asset value increase by buying the minerals directly. And I'd like to make the decisions which minerals to buy and who to buy them with. So that's why you'd end up with a self-directed IRA. In our case, because we've had such a large amount of investments in the last 12 months from individuals who have invested through their self-directed IRAs, we have created a really, really strong portfolio in the last 12 to 14 months. We now have over 2,500 mineral acres in the Anadarko Basin in Oklahoma. We have 269 wells on those particular minerals that we've acquired. It's unbelievable how many wells we own interest in less than a year. 179 are producing. The balance are either being completed, turned on, or in the process of being developed. We have 31 individual miniature portfolios that range between $300,000 up to $1.5 million mini portfolios. So there's a lot of diversity and selection. But more importantly is we've had 0 dry holes, and we have 16 oil companies that do all the heavy lifting. They manage all the drilling, take all the risk, and they send us checks every month for all the revenue generated from the minerals we own. So this is how you might consider looking at oil and gas as an investment specifically in the mineral space. Can you look at buying minerals on a frequent basis, just like you do stocks or real estate, allowing those assets to generate revenue, and at the same time, finding out or determining in your best way, is it something you do from your regular investment account or through a self-directed IRA. Let's give you just an example between traditional real estate and mineral rights, because this is what I get asked. A lot of our partners are heavy real estate investors, but they're now buying mineral rights because of the fact they can use a self-directed IRA. They also know it's qualified asset for a 1031 exchange. So a lot of our real estate clients are moving money out of traditional real estate, selling out at the top, taking those dollars and then putting it in a 1031, coming right back over to oil and gas mineral rights, which are a like kind exchange asset. But let's go through the list. With oil and gas mineral rights in the state of Oklahoma, we don't pay any property tax. Traditional real estate, you're going to pay property tax. We don't have any monthly expenses. That oil company's got expenses every month, all the time. Everything that goes on that well, they have expenses. We never pay any of them. It goes straight to us, a net check. Accounting fees, it's minimal. Essentially, our partners who own minerals, they get 13 things from us every year. They get 12 checks and a statement, one per month. And at the end of the year, they get a 1099 for the income they made. There's no expenses. There's no losses. There's no tax deduction because you don't have any losses. It's purely a net income asset opportunity. And you can see the rest of them. There's no repairs, no future rehab, no insurance costs. We don't have any employees or intellectual staff. We don't have any slip and fall opportunities. We don't have landscapers to pay. Once you write a check and participate in mineral rights, you have no further cost. That is the incredibly unique thing about mineral rights. It's one of the most passive investments you can make. And that's why so many sophisticated investors are moving as fast as they can to learn, to look at, and start to make decisions about putting minerals in their portfolio. Now, the reason we have this screen up here is that in our company, the way we've done it for 20-something years is that we've always sent out our revenue in green envelopes. And so we look at this as a green envelope opportunity, meaning that because minerals are so passive, because what you own under the ground, you've leased those mineral rights out to really Fortune 500 companies, or you've leased them out to major billion-dollar oil companies. Once the minerals are leased, which we handle, or in our case, a lot of the minerals we get have already been leased, we have no say-so. We have no obligation. We're not getting a call on the weekend that our hot water heater broke, or we need new carpet, or we have tenant improvements. What we do is we buy the minerals knowing that we have major oil companies that are handling all the accounting, all the reporting, all the production, all the drilling, all the cost, all the exposure. And at the end of the month, when they sell the oil and gas that comes from the wells on our minerals, they'll get a statement from the buyer that says, we picked up and acquired this many barrels of oil, this much gas. Mr. Oil Company, the lessee of Troy Eckard and my investing partners, owners, here is your check. And then that oil company will run it through their accounting deck and say, by the way, here is the total gross amount for all the royalty made from the mineral owners' interest on these properties that we sold oil and gas for. We will then give it to each individual mineral owner proportionate to how they own those minerals. In our case, we manage the minerals for our private partners. Even if you bought them yourself directly, the check would come straight from the oil company to you. So it's a very, very simple passive investment. It's a pure net income type of a considered asset. All right, so what steps can you take? And I'm gonna turn this back over to Will. The steps you can take, and let me just kind of go off the slide just a second if I can. Look, ladies and gentlemen, let me just tell you how this goes. Oil prices are about $42 a barrel today. Natural gas is about $3.15. With the latest fiasco with Saudi Arabia and Russia flooding the U.S. markets with oil, it was a direct attack on our industry. What they knew is they knew for a fact that we were going to be very exposed for our weakness because the oil and gas industry in the United States has a lot of debt. We borrow money. A lot of these oil companies borrow money to drill wells. Eckard doesn't borrow money. I don't like to owe somebody. But the oil companies that have been developing and leasing our minerals, they borrowed a lot of money. Saudi Arabia and Russia flooded the market. It caused an oversupply, especially with a COVID demand drop. So we had this enormous one-time black swan event where oil prices dropped into negative territory. Well, it's also done something more relevant and more deep. It has pulled back the private equity, the equity markets, the debt market has pulled back from the oil and gas industry. And we're drilling some of the lowest number of wells we've drilled in probably, 100 years, really, since the 1910s, 1920s. So here we are as an industry, which is running out of oil every day. We're down about 2 million barrels of oil in output just in the last 6 months, and it's going down further. And you and I are sitting here wondering what happens when all this oversupply goes away and all of a sudden demand starts to increase. where are we going to get this extra oil? Because we were using 13 million barrels. We're already down to 10.5 million barrels. Where's it going to come from? So the steps for you becoming either an Eckard partner or a mineral owner, whether you become a partner with my company or not, it's up to you. But more importantly is whether you get involved in minerals is something you have to take and consider. How will it affect your long-term portfolio? Well, I know from being in this business for 35 years and also being an active real estate and equity investor, I know that when energy prices rise, profits of companies go down. I know that when energy prices rise, they buy less cars, they buy smaller houses, they don't buy as many boats and trailers. It does affect the economy across the board on the stock exchanges as well as the bond market. So if you're thinking that maybe you've had some success in the stock market, had some success in the real estate market, maybe natural resources is something you should consider. So the first thing is you have to decide if you want to be in the investment, in that type of investment, natural resource. What kind of capital? Where's that capital? Should I open up a CamaPlan IRA today? Go ahead and be prepared to say, I'll put money in there and I'll fund it. So if I find natural resources or alternative investments, I can go ahead and fund it. And I think CamaPlan would be a great choice. And I think at the end of the day, then you'll have to jointly decide what your investment philosophy is going to be. So that's really 3 simple steps. But I just want to tell you 2 things, and that is I'm very grateful for your participation today and listening to this webinar. Number 2, I believe Will and myself will always be available to help you answer questions, whether you invest with our company or CamaPlan. This is about educating and making you aware of a sector that is evolving, that is very successful, and has a great deal of opportunity for those of you that have an interest. So if you ever want to talk to anybody at our company, you can reach hold of David Day. He is our business development manager. We have a professional salaried staff of business development team members that can help you answer questions. Many of the people who look at these types of webinars, in fact, own minerals in their family. They've acquired minerals. They'll reach out to us and say, hey, I've got minerals. What do I do with them? And I think the key is this is really about creating a relationship. And I think that's exactly why we do these types of presentations. So Will, I'll hand it back over to you. And I want to thank everybody for giving me the opportunity to go through some of these slides. And I'll be glad to take any questions if there are any.
All right. Thanks so much for that, Troy. And I can confirm that we will be able to email out copies of recordings of this webinar. Just reach out to info@camaplan.com. And if you have any questions, I'll bring up my contact information one more time. And I do see we have some questions coming in. So give me 1 second so I can bring up my contact info in case anybody. 1 minute. Here's a question from one of the attendees for you, Troy. Do I have to be an accredited investor to start?
So let me be very clear. Anybody that has a check can go out and buy a mineral right. You can go to the state of Oklahoma, pull into a truck stop, go to the men's room, and more than likely on the bulletin board, it says 2 acres of minerals for sale. It's a real estate transaction. You call the person up, say, I want to buy 2 acres. How much? Well, it's $100 an acre. Great. I'll buy $200, 2 acres of minerals. And maybe you work at Walmart as a checker. You don't have to be accredited. Whenever you look at the accreditation, it's normally because you're going to use a third party to help you identify the minerals and manage the minerals. And so firms like ours require accredited investors only because we're assuming a lot of liability as a fiduciary working on your behalf to find the minerals, manage the minerals, and obviously you'll make decisions based on that. So the answer to your listener, Will, is that you do not have to be accredited to buy a mineral, but you have to be accredited with Eckard Enterprises or Eckard Land to be able to invest with us. Now, I will tell you, the thing about minerals is that every single acre in this country that's not owned by the federal government or state has a mineral acre underneath it. So we've got, $500 million, $500 billion acres in this country you can buy mineral rights under. So buying mineral rights is easy. Buying the right mineral rights is the difficult part.
Great answer. Thanks, Troy.
Yeah.
While more questions are pouring in, I have a question. In the recent year with COVID, have you seen an increase in self-directed IRA investors, and do you see that increasing as we move forward and things return to the norm or as close to the norm as we can get back to?
Yeah, I think that there's two real clear observations, Will, that we've had. It's been quite astonishing for us. Whereas many of the people that manage investments in the energy space were finding themselves with zero products that made any financial sense because of the deterioration, or more importantly, investors were scared out of their mind, not knowing which way to go, what the whole COVID economic effect was going to be. our business has actually been the highest revenue or highest gross volume of opportunity as far as dollars invested with our firm in the last 7 months than we've had in 20 years. And whereas we might do less than 5% of our business through investments made out of self-directed IRA, I bet we're running close to 75% of our business in the last 7 months have all been through self-directed IRAs. And of that, I would say that probably 85% of those self-directed IRA investors are brand new to self-directed IRAs. They're individuals who had retirement money, they were in stocks, they were getting nervous about the stock market, either up or down, they weren't looking at diversification. So they said, I want to use some of my retirement money and I'm looking for alternative investments. And I like what I see in the terms of minerals and the cash flow and the safety and the passivity. Who do I go? How do I do this? So they call up CamaPlan and say, never done it before. How do I set up an IRA? How do I move money over? CamaPlan comes in with professional staff, walks them through the process. They fund their IRA and they write a check and participate in minerals. And then 60, 90 days later, we're sending them green envelopes with checks. And they call back and go, that was the easiest investment I've ever done. I worked with CamaPlan. It was the easiest custodian. It was the easiest professional firm. I bought the minerals. I don't get any calls. I don't get cash calls. How do I keep doing this? It's just a matter of funding. So to answer your question is, for us as a company, it's been absolutely eye-opening and quite mind-boggling with regard to not only the more affluent, sophisticated investors' awareness of minerals, but how they're funding it through their IRA has been quite shocking to us, but in a good way, obviously.
Thank you for that. Another great answer. And we do have another question coming in. Where do you see oil prices in the next few years going?
Okay, so let me preface it by saying this, and Will, thank you for that question. So opinions are like what we all know, right? Everybody's got one. Most of them, 99.9% of the time, are wrong. When I give out oil price assumptions, let me tell you first off why I get to the assumptions that I have. Having been in this business since 1985, I started in the industry right after the big oil embargo boom and watched the market crash. I joined the oil and gas industry at the bottom. I used to have people that I'd call for investments saying, hey kid, do you need a job? What are you doing? Oil market's in the dump. Who's going to buy investments in oil and gas? And my strategy was, well, you buy low, you sell high. So to answer your question, I've seen the various parameters and components that drive prices. And I've seen the effect of debt and equity and technology push and pull the industry, which in turn results in driving commodity prices. My assumption since March, when this whole debacle started with Russia and Saudi Arabia, was I said, neither one of those countries can last more than 60 days with this flood of oil because they both need in excess of $55 a barrel to run their country. So I knew it was a very short-term deal. But your specific answer is as follows. We will close at over $45 a barrel. I've said this since March at the end of this year. By December 31st, over $45 a barrel. We'll be at $55 a barrel or higher by the end of next year. And it's my personal belief, depending on the presidential outcome, if President Trump stays in office, we'll hit somewhere between $75 and $85 a barrel in the next 36 months. It'll be very healthy, very strong. If President-elect or intended-elect Biden gets in the office, because of his negative policies toward hydrocarbons and the effects he's going to have on public and federal lands, it could drive that price oil up like it did under the Obama administration, north of $145 a barrel. So the short answer is, I think we're in an uprise on prices. We're going straight up. I don't think there's anything they can do to stop it. And the reason for that is we have destroyed the supply side of oil and gas. There's not but 300 wells drilling. No one has any money. Exxon's struggling to pay their dividends. So if you can't drill new wells and all the other wells are declining, everybody's coming out of the house, stopping watching Netflix, getting back to work, you have a real problem. You have increasing demand, lowering supply. It's a catastrophic event for higher commodity price. So my clients and I are going to be super happy over the next 3 years on commodity prices. We're going to make a lot of money.
Thanks for the educated opinion there, Troy. So for someone like me who's new to oil and gas, who may need more information than what was presented or the wealth of information that was presented today, do you have any resources that you can recommend for people who are trying to better educate themselves?
So I'm going to give you my direct answer instead of all the way around the bushes like I normally do. It is a tough business. It is very, there is no central site to learn how to invest in oil and gas. Zero. You can't even find very good publications that'll tell you on public securities if Exxon's better than Chevron or Chevron's better than Marathon. The lingo, the language inside the oil and gas industry is so complex to an average investor. if you're really good at real estate or really good at bonds or stocks, the amount of information that goes into oil and gas, it's like talking Chinese to somebody who's never even seen a Chinese word before. So my answer is, it's probably more interesting or more valuable to your listeners to focus on things like going to the EIA website, which is the Energy Information website, because it provides you statistics that even a layman can read. We're using this much oil and our supply is down by 20%. That's economics 101. We're going to have a shortfall. It's looking at the charts that show what oil prices have done over the last 10 years and showing how it went up and back down. And typically that's, when do you buy the stock market? The stock market lost 10,000 points on the Dow. Most savvy investors wouldn't be running. They'd be looking for stocks to buy, knowing that it's taken an artificial drop. So it's very difficult to find a single site, but there's a lot of information. One of the things that we do, Will, and you know this from talking to us, we have just a ton of videos, a ton of educational information, because I treat investors the way I like to be treated, which is give it to me in the format of a sixth grader. I can ask you to increase the intensity of the information, or I can ask you to dumb it down. I just need to know as much as you know and as often as you can give it to me, so I can get comfortable with either going forward in that investment sector or deciding it's not for me. But as far as online sites, I don't know of a single site other than EIA for information, but quite frankly, it's a difficult business, which is why I think probably less than 500,000 people in this country own direct oil and gas mineral rights or interest in energy. It's just, they don't want to take the time. It's a great business, very lucrative, but you gotta want to learn it.
Absolutely. So you said the EIA website, and you, if you didn't list it before, what's your website again? EckardEnterprises.com?
Yeah, we're at EckardEnterprises.com, or you can go to elaminerals.com. And one thing I should tell you is that, there are a lot of energy consulting firms out there that you can tag on their site, and they'll give, without even charging, they'll give you a lot of written documentation. One good source that some of your readers or listeners might want to go to is World Oil, is a great online subscription site. They have all the latest information on who's making money, who's selling assets, and they're telling you why, and they're giving you insight about what's going on globally. So World Oil is a real good site that I use all the time. And I think there's just different consulting firms that you can pick up kind of what I would consider inside information. If you just take your time, it's not really that difficult, but it does give you fresh information to feed off of. And I think one of your questions that I saw at the bottom was asking about technology.
Yep,
and
I was just about to get to that.
Way you can learn about technology is when you go to World Oil or EIA, they're talking about better guided tools where they're using triangulation with satellites to guide that drill bit sideways for 2 miles to stay in that formation within 2 or 3 inches, where before you didn't have that type of tool. They're completing wells literally using artificial intelligence. The drilling rigs now can pick up legs and walk like Skywalker. So they're moving rigs locations instead of 2 or 3 days. They're moving in 6 hours. The rig physically walks from this well to the next well. The last time I was in North Dakota, Will, my brother was drilling some wells for a public company, and the rig was so advanced, it wouldn't let us take any photographs on the rig, but it literally looked like a gaming machine where the guy was inside the rig, sitting in a chair like I am with his hands on a hand panel, guiding the drill bit, twisting it with nobody on the floor of the rig. He was doing everything from remote, whereas otherwise you might have 6 or 7 guys outside. It was so advanced. So the technology is not only about just being better able to identify the reservoir, staying in zone, fracking, completing. It's even having to do with production. They now run all these wells in the field that are remote in North Dakota and Oklahoma. They're all run off solar panels with meters that are being looked at by somebody sitting in a computer room in Houston or Denver. And they know within 10 minutes if a well's slowed down in production or has a problem, they send a guy straight to that well. So it's just an extremely advanced industry compared to what was even 5 or 10 years ago. Very advanced.
All right. Great answer again. So again, I'm not very well versed in oil and minerals. That's why we have you here, of course, teaching us and myself, which I'm very grateful for.
Sure.
One thing I want to know is with companies like Tesla and the new electrical vehicles coming out, I understand personally that we're a gas country, we're a gas planet, and it's going to take a long time to get off, oil and all of those good things. Can you give us some reasons why you see the oil industry even rising in the next couple of years before we actually switch fully to electrical, if that's even possible?
It's not possible, but let me give you the answer. The answer is simple. As the amount of consumers grows, more babies, more industrialization, the overall energy market grows. And what the wind energy and solar are doing is they're simply taking a piece of that growth. but everything on your screen, your tie, your shirt, the chair, the computer, the board behind you is all made from petroleum product. Every part of the Tesla car is made from oil and gas. Every windmill is made from components from petroleum product. So the idea is that we're at about 13 million barrels a day back in March, but we're consuming 21 million barrels a day. So we would have to actually get to 21 million barrels a day now, right now, just to match what we consume. So whether you bring on batteries or whether you bring on wind or you bring on solar, the fact of the matter is we'd have to cover 2/3 of Texas with solar panels to equal even close to what we generate in oil energy as far as unit consumption, right? So the way I see it evolving the next 50 years, long after I'm dead and gone, is that the entire energy market or consumers' demand is going to grow, and the oil industry probably won't get their 100% share of the growth. Maybe they only get 65% of the growth, but that growth is predicated on alternative oil and gas, but the oil and gas industry is going to grow in total numbers. You can look at it since the 1910s. I don't care what they do. Oil, the worst thing that happened to oil, the alternative energies, Will, was the following. When oil prices collapsed to negative $38 a barrel in April, it destroyed the economics of wind, solar, and every alternative energy. Because why? You and I are not philanthropic. We want to pay electricity at our house, pay our bills. I don't think either one of us want to go just give money away. So all of a sudden your utility company is going to say, if you want to pay with wind, here's your price. If you want to pay with solar, here's your price. Oil's down here. If you want to pay for your utility bill based on oil price, because it's $25 or $30 a barrel, it's down here. And we're all going to say, I'd love to save the planet, but that's somebody else's job who's a lot richer. The human beings are going to find the best investment with the lowest risk to make them money. They do the same thing in their energy consumption. I'm going to drive that extra half mile to get my gasoline 10 cents a gallon cheaper. Even if there is a electrical station right next to me, I'm going to go get it cheaper. Tesla has a great value. So do all the electrical cars. I have a big investor in my minerals who's a huge Tesla investor, which doesn't make sense, but he understands that Tesla is made from oil and we have to have it. So he's playing the hedge. He's got 3 Teslas. He's got a ton of Tesla stock, but he's really loaded up on minerals with us because he goes, I'm going to win either way. Smart guy.
Very smart. Thanks for spelling that out for me.
No problem.
I see the questions are slowing down, and I'm not as good as oil and gas as I may like to be. Do you have any, at least until maybe we get another question before this, or maybe we end it after this, do you have any parting information that you want to let the listeners know?
I think it's real important for everybody that's on the webinar to understand 2 things. Whether or not you invest directly in oil and gas or you invest through publicly traded stocks. I mean, I've been buying Continental Resources and Comstock, and I've been buying Ovintiv. There are really good stocks out there right now, including Exxon, that have been badly suppressed. So there's a lot of good investment opportunities just in public stocks. But let me just give you this advice. 1, do not run from looking at oil and gas because you don't understand it. You didn't understand bonds before you got in it either. You didn't understand the stock market either. So make yourself educated. Rely on CamaPlan to help you set up IRAs and do your self-directed. Follow professionals. That's the number 1 thing. And the second thing is, let's talk about where the biggest issue today is, depending on who ends up president, has a direct correlation on what's going to happen both in taxes. It's going to have a direct correlation on what happens in the economy with regard to different policies. So there is a site that'll tell you, what happens to the oil and gas industry under President Trump, what happens to the oil and gas industry under the potential winner, Biden. And either one, you need to know what happens. But I can tell you, both of them come to the same conclusion. We're not going to have enough oil and gas and prices are going to rise. But there is a significant difference under each candidate when it comes to 1031 exchanges, capital gains tax, and all these play a part. So one of the reasons a lot of our clients are moving money out of their traditional retirement and putting it inside of self-directed IRAs is to try to move as much money as they can and prolong paying any taxes, because they believe we're going to be on a higher tax rate no matter what. So that's the only thing I would add to the commentary is that, right now you've got to be a vigilant investor, digging and asking questions. Pick up the phone, call CamaPlan and find out, how do I do it? Let me set my account up. Let's get this thing prepared. And I highly recommend it. I mean, CamaPlan has been on with a couple of presentations. Fantastic group to work with. We did a presentation the other day, Will. I thought that went great with Roberta. And so it's something that I think that any investor who is going to be successful should get busy looking at right now. And that's the self-directed IRA.
Thanks so much, Troy. You've definitely piqued my interest. I'm sure the audience who stuck around this entire presentation definitely have their interest piqued as well. I don't see any more questions coming in, so I want to thank you one more time for attending the webinar with us today and representing Eckard, and coming out here and talking to the CamaPlan audience. Everybody in the audience, feel free to reach out to Troy or Troy's company and David Day. His information is there in the chat. If you have any questions about self-directed IRAs or how you can utilize them for oil and mineral rights, please feel free to reach out to us. Our contact information is very well displayed on the on our website or earlier in the presentation. And I want to thank everybody for attending, and I hope you guys all have a great rest of your day, great rest of your week.